Kara, let's talk about the trade deficit for a moment. As you look at these numbers, I also want to note the fact that if you compare this historically, as Alex said, it's been over 10 years since we've had it this much, and that's in a day when we were importing a lot more oil than we are today. That actually should be benefiting us. So it's apples to apples. It's getting worse despite the fact that we're not importing oil anymore.
It's true, and it's interesting because the trade deficit is not a great forward indicator of where the economy is headed. It's really, an output or an error even. And before Trump came into office, nobody really focused on it all that much. But the reason why it's important today is because it's important to Trump. So as we've seen that significant widening, as you've pointed out, there have been some structural changes in the economy where we're importing less oil. It should make it easier to have a smaller deficit. But then we have increased fiscal spending, which is forcing that wider. But as that widens out, it goes counter to the very goals that Trump has outlined. And in turn, I think it makes it even more important that we have a trade resolution. So in some ways, it's a little counterintuitive, but I would see this almost as a positive because I think it's more likely that Trump and Xi actually come to terms with an agreement.
So let's talk about that, Dean, about the trade resolution, because we're hearing this increasingly. We saw the OECD this morning saying part of the problem is trade, and that's why they're taking down the numbers on global growth. We talked earlier with Bill Dudley, the former New York Fed head. He said if there's a trade resolution, it really will turn around global growth. How important is that to global growth and U.S. growth?
I think it's quite important because there's a few channels where it's working to hinder growth right now. There's a lot of uncertainty. Businesses don't know what the rules are going to be in terms of trade, and so until there's some resolution, they're going to hold off on investing. So that's one reason. Also, the tariffs themselves are negative for growth. So they're small in the scheme of things, but that doesn't help either. China's slowing is another factor that's slowing trade flows as well.
So, Kara, what's sort of more permanent, what's more temporary? Because you take a look at exports, they actually rose over 6% last year, but imports jumped 7.5%. How much of that do you see as, say, stockpiling? How much of that is then related to a stronger dollar?
I think a fair amount of it is related to stockpiling, so it'll be interesting to see how these numbers progress over the next couple of months. But I do think the more important impact is really that psychological impact that you just heard talked about. As people start to get worried about, what tariffs are going to be going forward, they're going to be less likely to invest that next dollar, build a factory, hire a worker. And we've seen very much those confidence swings in December where they got very, very negative, and we saw the stock market decline, we saw spending decline. And then we've seen the reverse. As some of those fears started to abate, we saw confidence rise, and I think you'll see spending start to rise again. So all of that means as we start to see, the stockpiling effect get away, we'll get a better view. If we start to see some resolution on the trade front, people are going to be more willing to spend and look forward. So I think it'll be very important to watch that knock-on impact.
Dean, Kara raises a very important point, that is business investment, capital investment, and what it may be doing to productivity ultimately, which is a source of growth. Where are we right now in the United States in capital investment?
Well, there's a perception that business investment has been quite weak. It's not actually the case. If you look at business investment as a share of GDP, we've only surpassed where we are now a few times in the last 60 years. So it's actually quite high relative to GDP. I think what people are complaining about is, in a sense, is just that GDP itself has been relatively slow. So business investment tends to follow where GDP goes.